Good morning, everybody. Welcome to the ARMR Report Week in Review. I'm Brett Rosenthal. I appreciate you guys taking a moment out from the Morocco-Portugal game to chat about the stock market with me. We're going to hop on the cannabis couch today. That's going to be our focus. This is a half-hour meeting because after this, ARMR Insiders will be doing our monthly macro meeting. That'll be a Zoom conference where you all come into our virtual hedge fund conference room, and we're going to hash out big picture expectations of market direction, how we want to invest in 2023, and really how we want to handle things like the further developments from the FTX collapse and the virus that's spreading. So we're going to discuss all of those types of things in our macro meeting. But for the week in review, I wanted to share this with all subscribers, and we're going to just break down what our thoughts are on cannabis. Right? We've had that rip higher and then utter collapse this week, and so we're going to talk about how that changes our portfolio, if it does at all, whether or not we what our expectations are really for going forward and how we're taking advantage. So I'm going to talk about that, and I'm going to just give you some brief goalpost thoughts on how we'll be trading next week based on the Fed meeting and CPI. So without further ado, this is a virtual hedge fund. And I call it that because what we're doing, we have ARMR Insiders from 35 countries around the world. We all come into the room during the trading session in the US here, and we share information. Now, I think it's pretty clear, and you'll see this happen over and over again, that what the media wants you to believe is smart money is actually mislabeled. Okay, that's arrogant money, right? Which ends up being dumb money, okay? Which can end up being evil money in the manifestation of frauds. So you are the smart money. I'm the smart money. You're the smart money. Individuals every day working in the real world, gathering information. You may not even realize the power of the information you have. And so what we did was set up the virtual hedge fund desk so we can all work together as individuals managing capital and capture that information, figure out how to use it to help us all be more successful running money. If you don't mind, I'd like to be the chief investment officer of this hedge fund. And what I'm sharing with you is how I ran capital as a hedge fund manager, how I manage risk. The ARMR Report stands for Algorithmic Risk Management Research. So we named it that because the big difference between successful professional investors and an individual is that they may have information, they may get it right how to use it, but managing risk is the hardest aspect. Okay. And whenever you talk to the best managers in the business with great track records, they're always going to say to you, look, everybody can have great information. The question is how to maximize that information for gain and how to protect capital and manage risk. And so that's what we try to do on this desk. So I'm going to share with you how I run my own personal capital. Let's start with risk monitor algorithms and that information that we provide. It's proprietary algos that we use at the ARMR Report to drive our big picture investing decisions. And then we're going to hop onto the cannabis couch. We will be doing this macro meeting at noon. So if you want to be part of that, right here, armorreport.com, you can check it out, subscribe. We'll be happy to include you today in that macro meeting. It's ARMRreport.com. All right. So as always, I like to say, look, I'm sharing with you how I run my own capital. You're the portfolio manager of your own assets. Okay, what we don't do here is blame anybody else if things don't go well in our portfolio. We don't blame somebody who is a source for information, right? And the information, that could be right a year from now, but it's not right now. And we lose money on that. We don't blame that person. We say we're the risk manager. We take responsibility for our own actions. Okay. And so I'm going to share information with you. That's how I manage my capital. Right? I don't blame anybody else if I lose money. I say, okay, my mistakes, got to work better at managing my capital. Same for you. So I'm going to share information. You're the risk manager. Figure out how you want to run your portfolio. Now is the time and I urge everybody to do this, now is the time to write out your strategy. I've got it written on a whiteboard above my desk. I got all my intentions for 2023. I'm writing them on that whiteboard back there. I want to remember exactly what I want to do and execute. The hard part is the execution. Keeping your decisions within the spectrum of the strategy you've laid out. So if you lay out that strategy at the end of the year, when the market's closed on a weekend, you work through your progressions and you decide how you want to run your money, then all you got to do next year is execute along that strategy. And when you see yourself making decisions that are far astray from that strategy, you stop. You step aside. Create a paper account for all those terrible trades. You'll see at the end of the year, they're all terrible. They're probably what's messing up your performance in 2022. Avoid doing that in 2023. Figure out your strategy now. Execute that strategy as we go forward. And we're going to talk about that in the macro meeting also. I'll share with you what my strategy is, how I'm breaking down my portfolio and how I want to run the money. And then use that as a guide for your own growth. So first thing, let's dive into the S&P, okay? What we see here, is this rally off of the low here, okay? This was the risk monitor green signal. So for those of you, new to the ARMR report, our algorithms based on 7 indexes, when they all speak in unison, that gives us risk on, risk off opportunities for our whole portfolio. There's an index only portfolio we manage where all we do is buy the 7 indexes or a combination of those 7 indexes. And when the risk monitor goes red, we go to cash. So number one thing about the week in review today is that the risk monitor went red right here. Okay. So we're going to all do this together. See the graphic right here. On this day, the risk monitor went red. Okay. Whoops. And that's, why don't we fill it in as red? All right. There's the bar. Big red bar. Okay. Risk monitor is now red. So what does that mean for how we run money? Number one, we carry a lot of cash right now. The index only portfolio, all cash with the exception of a position on treasuries, TLT, that has a trailed stop that's yet to be hit. So we're still long that position, but that'll go back to cash if treasuries break down. Our ARMR swing strategy for the S&P, red. So in fact, what's interesting about that is that strategy actually went red right here on this day right here. And you'll notice that we haven't missed a thing in the market subsequent rally. So the market popped up here, right? And then just immediately sold off. And we're back down to the same price where the ARMR swing strategy went to cash. So the algorithmic information from the ARMR report today is that it's time for max cash. What the key takeaway here is the algorithms are not telling us the market has to crash. That's not what the algos are designed for. They're designed to say, look, when the reward is best versus the risk I have to take, when that's optimal, I put money to work. When that reward risk gets inverted, which it is right now, I want max cash. Sometimes that will just lead to a sideways action in the market. It builds a base and you get another risk on green signal at higher levels. I'll pay up for the market. I don't mind, right? We'll get the next risk on green wherever it happens. Sometimes it's higher, sometimes it's lower. Obviously this year it's been lower. We've only had 2 green signals. And so this index only portfolio is performing the best. Back here, we went red, right? Market cratered, quick green, red again. That was a break-even trade. Didn't trade all throughout the year until right here, okay? And then we captured about a 5% gain net on the portfolio, okay? And now we're back to red, waiting for the next movement. So jumping into next movements and what it could be next week. That's a really long conversation, and I want to get to cannabis. And I think what we're going to do in our macro meeting at noon, I really want to flesh this out with ARMR Insiders. I want to hear your points of view. It's a chance for you to come into that room and share what you're thinking as well, because we really got to wrap our head around the unreal fraud that went on at FTX. And we've got to wrap our heads around the unreal collapse in what was a credit bubble, right, in crypto. Without a doubt, in my opinion, there are many more bankruptcies to be announced over the next, I don't know, 3 to 6 months. Okay. And so the question is, how far is the virus spreading? I think a lot of people believe that it's a crypto problem, not a traditional finance problem. Okay. And I think that's a huge error in an assumption. Okay. I've been through credit collapses before. And what I think people miss is the ripple effect. Who was giving the credit, and who was giving the credit to the guys giving the credit, and who was giving the credit to the guys giving the credit to the guys giving the credit. And it goes like this, and it has far-reaching tentacles that what you'll see happen is a story breaks, a collapse, things go quiet for a while, everyone thinks it's okay, and then the next shoe drops. I don't really think we get through this until there is a dislocation in the traditional finance market, because the ripples finally make it to areas that people didn't expect. And that creates the fear that creates the bottom. So I don't think we're there yet. So when I look at the market and I just say, let's do an eye test, what does it look like to you? All right. Clearly, it looks like a rally from the top of the trend to the bottom of the trend to the top of trend, right? We can look at it right here together. We're just looking at the S&P now. Okay. It's pretty obvious. Bottom of the trend, top of the trend. Tries to get above the 200-day and gets reversed. Okay. And so now we go into next week. What are we going to do next week? I'm going to share that with you, and then we'll get to the cannabis couch, and I'll try to get to a couple questions if you have them. Feel free to fill up the comment section. I'll try to make my cannabis thoughts brief and then answer any questions you may have before our 12 o'clock macro meeting. I think the market's in a very dangerous position. I don't like to make a prediction. I like to read and react to what happens. But when I talk about what I think is going to happen, I share that because it's like a goal post, right? If you're a goalie in ice hockey, right? You're banging the post to see where you are in the net, okay? So you're facing the shooter, you're saying, okay, where am I? Okay, here's where I am. And then I can get an expectation of the play that's going to unfold. That's what we're doing when we talk about what do we think is going to happen. And if it doesn't happen that way, there's information to glean from that as well. And we'll be doing that live on the trading desk while it's happening, when the CPI number drops and when the Fed comments drop. Okay. So we'll be actively trading, sharing our trading thoughts, sharing our algorithmic movements next week as it's unfolding. But I like to go into it with a thought of what do I think is going to happen, and then adjust. If I see something happening, which I expect, then I can hit that real hard because I know this is what's going on. So the number one scenario for me going into next week is that the market is in a precarious position. I think it's priced to a perfect CPI number. I think if the CPI number is stronger than expected, the market's going to have a serious problem. I think that if the number is a little bit weaker than expected, that's already been played. Market's already up. Last quarter, last month, we had the big move up. Remember, 3% up on the S&P, 4% up on the NASDAQ, because the CPI number was a little bit better than people thought. But now price is right back down to the same level it was for that CPI number. Okay. So it's going to be very hard to get through CPI and then the Fed. We have to see where we are. If we come out of next week and the market can close above the 200-day moving average, chances are the risk monitor is going to go green, and I'll put money to work, right? My personal opinion won't matter. I'll put money to work, right? But I think that the dangers dramatically outweigh the rewards going into next week. And that's why we're in a max cash position. And then we'll just execute. All right. Let's move on to cannabis. Let's move on to cannabis. This is MSOS. Let's take a look at a blown up picture here of. Okay. So this big move up. And let me just couch this conversation with how the ARMR Report's putting money to work. Okay. Those of you who know me know we didn't own cannabis all the way down. So I'm just putting this in perspective so you understand where my head is and how we run money. I'm a huge fan of cannabis. I think over time, there's going to be a moment in time where we can make a lot of money owning cannabis stocks. At the ARMR Report, we made a lot of money owning cannabis stocks a few years ago, 2019, skyrocketing, right? And then we got stopped out of our position because we use algorithms and stops to protect, and we booked that gain. And then it was just this unrelenting sell-off since February 2001, just like all other innovative type of ideas, innovative stocks, cannabis stocks, crypto, like all these things have unwound, okay? We started buying MSOS again right in here. And what I shared with you guys was, you know what? It's just getting so cheap. It's ridiculous. I'm going to start buying calls on MSOS, right? So we were buying really long dated options on MSOS just to get a foothold. Then we got lucky, right? Because a couple of weeks later, Biden administration says we're going to make changes. We're asking DOJ to come up with ways to change the situation. Huge run up, like what was it, 40% in a couple of days. Pulled back, and on that pullback, we built our position up. Okay. Then we have this run right up to the 200-day moving average. And ARMR insiders can attest to the fact that in the morning, which was Monday morning, right at the top, live as it was happening, I said to ARMR insiders, instead of cheerleading at this moment, we should be buying puts on MSOS. Just hedge it. We have a huge gain in a very short period of time, and we don't know what's going to happen next. Okay. 3 unbelievable down days. Now, does the sell-off change my bullish opinion? Not at all. And I want to go over what I think this sell-off is. I don't know for a fact. I'm going to share with you my thoughts, and then I'll take some questions real quick. This looks like a classic short seller's takedown. A headline comes out. And by the way, this is a headline we've been reading. Those of us in the cannabis space know this. Every single year for like the last 4 years. The defense bill comes up in December, and they're going to add safe banking to the NDAA. And it never gets added. It's just a bargaining chip. The Democrats pretend they're going to add it. The Republicans pretend to be upset about it. They don't add it. Democrats get something for the blah, 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 blah. It's never going to be added that way. And as a cannabis investor, we don't want it to be added that way. I don't want it to be added as an afterthought, stuck onto a bill. It needs to be its own bill. Okay? I'm not invested in this space because I was hoping, and I doubt you are, we were hoping that it would be added to the NDAA. Nobody who's a real investor in this space cares about that. We're in the process of a lame duck session, and if I had to say, what do I care about? In the next couple of months, I need to see some movement to some degree. I don't care if it's the DOJ coming back with a recommendation. I don't care if it's Safe or Safe Plus or something else being, pushed through. I don't care what it is, but I can guarantee you I wasn't sitting here long cannabis stocks because I was hoping Safe was going to be added to NDAA. Okay. So what happened last week was a classic takedown. If you looked at the stocks trading on the Canadian Stock Exchange, where we know there's rampant naked short selling. I know regulators are talking about clamping down on it. They're not clamping down. It's rampant naked short selling. And the shorts are trapped. And they've made a ton of money, and they have huge positions. And they're trapped because at some point in here, DOJ is going to come back with, hey, let's reschedule, let's deschedule, and the train is moving down the track. So they got to get out of their positions. And what they're doing on a headline like, oh, safe's not going to be added, is they're naked short selling, and they're hitting the bid. If you watch what they're doing on the Canadian Stock Exchange, I've seen this happen so many times in my 30 plus years of running money. In a very illiquid market, a short seller that might have 1 million shares short and he's stuck and he has to cover it, he'll go out there and take 100,000. He'll increase his short position 10% and hammer the bid, hammer the bid, hammer the bid until he creates panic, implosion. And then he's buying as much as he can down there. And by the time he's done, he's gone from 1,100,000 short to 500,000 short. Like he creates the panic and then goes and covers. I'm just giving you numbers. I'm not saying that happened exactly here, but that's how this works. That panic selling looks nothing more than a takedown by the shorts to help them cover positions. I've seen it happen so many times in so many illiquid stocks. So I'm not concerned about the position. We talked about buying puts right at the top just to protect. Right? And when I'm talking about buying puts, if you're not an options trader, well, you go out there and reduce your position, book some profit. What we want to do is trade around the core. So I'm in a core position right now. If the selling gets worse, I might take it down to a smaller position, which I'm not touching. Okay. I'm always going to have a position on. Down here, I'm carrying some cannabis. I don't care what happens because there's going to be movement, in my opinion, in the next couple of months. And I'm going to be there. And I've earned the right to do that, because I've avoided most of the collapse, okay? So now I'm starting to put money to work. So I'm at a core now. I might cut it down a little bit if I have to, okay? But I'm at the bedrock. The puts have already been sold. We already booked that gain, okay? And let me tell you this last thing, and I'll take any questions before I've got to go. I think there's a unique opportunity in selling like that to start selling MSOS puts, which is exactly what we've been doing. We can get into MSOS sub 850, sub 8. We can get in there somewhere around $7 if we want. You can go look at the options chain. When you get an ass kicking like that, put premiums go like this. That's the time to sell them if you want to be an owner. So I'm not running out there buying MSOS, but geez, someone wants to give me that kind of premium. That's one way for me to build up my exposure a bit. But like I said, we're at a core holding right now. So we've kind of pared it back to something where we can just deal with the swings. And I'm looking for the next entry point where I want to increase exposure. That's what I'm doing. All right. Any quick questions before I go? We got 7 minutes left. Let me just see if you got any comments here, any questions you want me to go over. Apparently not. Apparently somebody wants me to do something else in the comment section. All right. So I'll take the last few minutes of this meeting to flesh out my thought a little bit. And I shared with you comments up here for you to read through. So I'll let you read those comments over there, what the market did last week and how it imploded. But to get back to market direction and cannabis, as long as we're on the couch, cannabis is subject to market weakness like any other sector. Okay? So don't forget that. So the risk monitor is red and cannabis gets wrecked. Makes total sense. These are illiquid assets. And then what I want you to think about, I'm going to leave you with this thought. Move off of cannabis for a second. I'm going to leave off leave with this thought about the market in general, because it's really disturbing to me what's going on inside of find out more and more the unreal fraud that was perpetrated at FTX and the crypto meltdown. Here's a thought of where, when I say there's a ripple effect and the tentacles that are spreading into traditional finance. And I really want you to think about this, because if the market is breaking down next week, and we could get a soft CPI number and the Fed talking dovish, and if the market goes down on that, we got a serious problem, right? Market should go up on that, theoretically, right? Market goes down on that, we got a serious problem. And I would submit to you that one of the major problems you've maybe read about, maybe heard about, follow me on Twitter at Brett Rosenthal, I've been posting about it, is that Blackstone has a couple of funds. One's a REIT, one's a bond fund, where they're not allowing investors to take out capital, right? They've halted redemptions. And the CEO of Blackstone comes on CNBC and he says he's baffled. He's baffled that the market is concerned about this. This is normal, ordinary business. We don't want to sell the real estate right now because we think it's the wrong time in the market, so we're not letting people redeem, right? I mean, I submit to you, he's going to look back 12 months and think that was exactly the right time to get rid of his real estate if he could. I think what the CEO and everybody managing those portfolios is saying is there's no bidders. There's no bidders for the real estate, okay? And he comes on CNBC and he says he's baffled. And I want you to realize that that's exactly the type of thing we saw in 2008. Dick Fold, Lehman Brothers, baffled that people are concerned about Lehman's balance sheet. Ben Bernanke, baffled that people are concerned about the financial system, right? And so it's the same process. History doesn't repeat, it rhymes. And it's rhyming. And I mean, like, unfortunately, it's not like a Dr. Seuss rhyme. You know, it's like a gangster rap rhyme right now, okay? It's ugly. It stems from crypto. It's making its way into traditional finance. There are bankruptcies and credit collapses. And now traditional finance is not letting whoever the investors are take capital out. Okay, well, if you can't get money out of that Blackstone, you're going to say, that concerns me. I'm going to take money wherever else I can, in other REITs, in other corporate bond funds. You see, this is how it works. So be very careful. Now, hey guys, if the market skyrockets next week, closes above the 200-day moving average, and the risk monitor goes green, I'll put money to work. But I'm just sharing with you the goalposts here. If the market's breaking down next week, and particularly if it breaks down on a benign CPI number with a benign Fed comment, then you're going to want to make sure you're protecting your capital. I wish you all the best of luck next week. If you have an interest in joining the ARMR Report, right there, armorreport.com, ARMR Report.com. Everybody from the ARMR Report, ARMR Insiders, let's swing over now to our Zoom video. Let's get that set up so we can have our virtual hedge fund conference and you guys can speak and we can all kind of address these issues and see what our macro view is of how we want to structure portfolios going forward. Everybody have a great weekend. Take care.